The USD CAD fell further to near 1.3730 after two influential Fed officials came out in support of interest rate cuts this year. This is despite recent data that showed the US economy is still very much robust. But apparently the Fed is more concerned about the financial system than they are about inflation right now. In fact, the latest FOMC meeting minutes revealed that there was a broad recognition among Fed officials that there had been a material deterioration in the financial system since their previous meeting in March. And this deteriorating financial system is more than enough reason for the Fed to reverse course and start cutting interest rates this year. Now, in today's video, I want to share with you why this is bad news for the US dollar and the US dollar index, and what this means for the Federal Reserve's next policy decision in June. But before we do that, I would really appreciate if you could leave a like on this video and subscribe if you haven't done so already. Okay, so let's get straight into it. Earlier today, two influential Fed officials gave speeches that were slightly more dovish than the market expected. First, Chicago Fed President Austin Goolsbee said that there is no reason to be complacent about the inflation outlook and that the Fed should be prepared to cut interest rates if needed. Then shortly after, San Francisco Fed President Mary Daly also gave a speech saying that the Fed needs to be cautious and prepared to cut rates if economic conditions warrant it. Both of these Fed officials are voting members of the FOMC this year, and both of them just signaled that they are open to cutting interest rates this year. Of course, the market cheered this news, and this is why we saw the USD CAD drop from 1.38 to 1.3730. But here's the thing. The problem with the market right now is that it's way too focused on the short term. The market is only looking at what the Fed says and doing exactly the opposite of what they say. If the Fed says that they're going to keep rates higher for longer, the market cheers this and assumes that the Fed will cut rates immediately. And if the Fed says that they're open to cutting rates, then the market believes that the Fed will actually cut rates in June. But here's the thing, Fed officials can say whatever they want. The truth is, the Federal Reserve has no choice but to raise interest rates further and to keep rates higher for longer because inflation is still way too high. In fact, the latest CPI report showed that inflation is still at 9.4% and core inflation is still at 8.3%. So the Fed still has a long way to go when it comes to bringing down inflation. And sure, we might see some temporary pullbacks along the way, but that doesn't mean that the Fed will actually cut interest rates this year. In my opinion, the Fed will probably keep hiking interest rates until the end of this year or early next year. And once they reach a peak rate, they will then keep rates on hold while the economy slowly recovers.